There's a new rule coming out of Europe, and honestly, it's about to send some major shockwaves through thousands of US companies. So, in this explainer, we're going to break down exactly what's changing and, more importantly, what it all means for you.
It seems like a pretty simple question, right? But if your answer is yes, I mean, if you have any operations, subsidiaries, or even just a good chunk of sales in the EU, then you really, really need to lean in and pay close attention to what's coming next.
And let's be super clear here. This is not just another layer of paperwork. No way. We're talking about a fundamental shift in corporate transparency, one that's going to directly impact how thousands of American companies do business, whether they're ready for it or not.
Okay, so what exactly is in this new European rulebook? Let's dive in and take a look at the core of this directive and, figure out why it's causing such a stir.
All right, here's the bottom line. It's called the Corporate Sustainability Reporting Directive, or CSRD. And what it does is it puts all that environmental, social, and governance reporting, ESG, on the exact same level as financial accounting. Think about that. We're talking mandatory audits, super strict formats, and real legal accountability. So yeah, the era of just putting out those glossy, optional sustainability reports, that's officially over.
And just to give you a sense of how big a leap this really is, let's look back at the old rules. The previous directive, the NFRD, was way smaller. It only applied to about 11,000 large EU companies. Okay, now get this. Under the new CSRD, that number just explodes to nearly 50,000 companies. That is a massive expansion. And it's all designed to pull sustainability reporting right into the mainstream of corporate governance, not just in Europe, but for all its major trading partners too. This quote right here really gets to the heart of it all. What the EU is basically saying is that a company's impact on the climate or its labor practices, those are no longer soft issues you can just brush aside. They see them as material financial risks and opportunities, and they believe the public has a right to know about them. All right, now this is where it gets really interesting for any U.S. business listening. This directive has something called extraterritorial reach. It's kind of a fancy term, but all it means is that these rules can reach across the ocean and apply to you, even if your headquarters is in, say, California or New York. So this whole thing is rolling out in phases. EU companies, they're already gearing up. But for a lot of American firms, the key year to watch is 2028. That's because your first report will be due in 2029, and it has to cover all your 2028 data. And look, I know that sounds like it's a long way off, but for a change this big, the prep work needs to begin now. Seriously. So how do you know if this applies to you? Well, the rules are super specific. Your US-based company gets pulled in if you check both of these boxes. First, you make over 150 million euros in revenue inside the EU each year. And second, you have at least one significant branch or subsidiary over there. You can bet this is going to capture a huge number of American multinationals. Okay, so let's say the rule applies to you. The next obvious question is, what in the world do you actually have to report on? Well, the short answer is a lot. And let me tell you, this goes way, way beyond just tracking your carbon emissions. So the absolute cornerstone of this whole thing is a concept called double materiality. Now, stay with me here. US rules usually only focus on one side of the coin, how sustainability issues like climate change might hurt your bottom line. But the EU says, nope, that's not enough. They demand you also report on the other side, how your business impacts people and the planet. Think of it like this. If you're a U.S. clothing brand, it's no longer just about reporting how a drought could affect your cotton prices. Now you also have to report on the working conditions in the factories that make your clothes. See? It's a two-way street, and that is a major departure from how things are usually done in the U.S. And when you put the US and EU rules side by side, the gap is just huge. The SEC here in the States is really focused narrowly on climate's financial risk, but the CSRD, it takes this much broader full-spectrum ESG approach. We're talking everything from biodiversity loss to human rights in your supply chain, all viewed through that double materiality lens we just talked about. So here's the key takeaway for you. If you think just complying with US rules is going to cut it, it won't. Not even close. Okay, I get it. All of this can sound pretty overwhelming, right? But what if we reframe this? What if this isn't just a giant compliance headache? What if it's actually a hidden opportunity? Let's spend a minute on how your business can get ahead of the curve and actually turn this challenge into a real strategic advantage. But first, let's be crystal clear about something. Ignoring this is simply not an option. The risks are real and they are substantial. We're talking everything from big fines to literally being shut out of the massive European market because your partners and customers can't get the data they're required to have from you.
Okay, but the good news is there's a clear playbook you can follow to get ready. It all starts with a simple assessment of where you stand today. Then you've got to get your internal teams, finance, legal, sustainability, all on the same page. From there, it's about building or upgrading the data systems you need to track all this new information. Make no mistake, this is a multi-year project, which is exactly why starting as soon as possible is so critical. But look, this is about so much more than just dodging penalties. The companies that really lean into this change, they can unlock some serious value. They're going to find it easier to get capital from all those ESG-focused investors. They're going to build a stronger, more trusted brand, and they will absolutely win more contracts with that growing number of customers who really demand sustainability from their partners.
And really, that brings us to the ultimate question this new directive forces every single business leader to ask themselves. Are you going to treat this as just another compliance box to check? Or are you going to see it for what it could be? A roadmap to building a more resilient, more competitive, and ultimately, a more successful company for the future. How you and your team answer that question, well, that could define your business for the next decade.
So, our deep dive today was informed by a guide from the Pierce Sustainability Consulting Group. A big thank you for joining us. We really hope this breakdown helps you start to navigate what is definitely a complex but really critical road ahead.